I am your host, James Mackey, and we got a really exciting conversation with you for you today. We're joined by Asad Zaman. Asad, what's up, man? Welcome to the show.
Thanks for having me. Looking forward to this.
Yeah, this is going to be a lot of fun and very excited to discuss the topics we've outlined for our community today. I would love for you to share a little bit about your experience, what you do, and how that frames your perspective so everybody tuning in knows where you're coming from.
I get to talk about myself. I love doing that. Okay, so I am the CEO of Sales Talent Agency. We are a recruitment agency that focuses on helping companies build out their go-to-market teams. The founding story has to do with how we think about this space. So I'll tell you very quickly, which was that our founders, prior to starting the business, used to work at Monster. They were with Monster from product market fit to about 100 million in revenue. Monster, being the first real job board, offered the world a cheaper, more efficient, more measurable way to find talent. But they learned something through conversations with their clients, which was that it was totally ineffective for sales. And the reason for that is that sales is really interesting. All of the demand for sales targets about 10 to 20% of the salespeople out there. And those people are generally good. They get paid well, they get treated well. So they're not going to job boards. If you want them, especially before you are Amazon and Google from an employer brand perspective, you have to be the ones going after them. So that was the insight that led to the creation of the business. They looked at the Canadian landscape and they realized that there was no agency at the time that specialized in solving this problem. Being sales leaders, they knew that the problem was complex enough that it needed a specialist. So they started the company. We stayed within Canada, worked on junior and mid-level sales roles for the first 4 years. We're 15 years in, so we've evolved a fair bit. Right now, we are across the entire go-to-market team. So that's one way that we've evolved. We've got practices in customer success, product marketing, technical sales, etc. We're end-to-end, so CROs down to BDRs and everything in between. And we've expanded geographically. So we are one of two leaders of this category in North America as a whole. And we are present in Europe and Asia Pacific as of the end of last year, or actually the end of 2021. In terms of our scope doing this, so we've worked with about 1,500 companies, mainly tech, 70% are pre-IPO, 30% are post-IPO. We've facilitated about 700 million in salaries. So we've had tons of repetitions doing this, and those repetitions have informed have helped us build our network out and our brand out. But more so than anything else, it's helped us develop the systems that we deploy. Philosophically, we believe that recruitment is not an art, it is a science. It can be done in a repeatable, predictable, and scalable manner. And so we've had the pleasure and the opportunity to develop these systems and tons of repetitions of optimizing them, calibrating, and developing frameworks that we feel give our clients a real competitive advantage. So in a bit of a nutshell, that is us.
Awesome, man. Well, that's really great to hear. And I think that that's what's going to lead to such a helpful conversation, because between the two of us, we've worked with so many tech companies and we've helped so many hire. And I'm, my company, we do some work on the go-to-market side for tech. About a third of our business, maybe closer to between a third and half of our business goes to go-to-market. But then we're also on the technical side. So engineers, products. So we have segmented teams, and then we have a G&A team for, finance, HR, everything else, right? So
it must be really interesting to see the market as an overall market like that, because we have this one lens in it, right? And it's a really interesting lens. It's fascinating. But I really enjoy talking to people like yourself that see the whole side of it and practically see it, not just through the data we even look at, but you get to actually practically experience how this market is shaping up in finance versus technical versus sales. And I think that's really interesting.
I like it. I find it really interesting too, because there's just more of a variety of roles that we get to work with. And I have experts on my team, people that specialize in tech and people who specialize in go-to-market. So I can learn from these folks, which at this point, I know we were talking about earlier, staying close enough to the game to know it inside and out. But quite honestly, I rely on my team because they have this expertise and they're still hands-on. And so they bring me a lot of insights, which I find to be really cool. But yeah, it's weird. It's like when we see market shifts from a strong bull market into whatever we're in now, whether it's a recession or not. I think it's interesting because we can see, okay, this is how go-to-market strategy is being impacted by this shift. This is how engineering strategy is being impacted. And while we're on that topic, I actually have two insights that I can share on that. We saw a lot of our category leading clients significantly cut engineering teams in North America. And so what we saw was we saw companies like Affirm and other category leaders cut 500 plus engineers that pretty much they had hired most of last year, right? So within 1 year, and focus on shifting their strategy to an offshore model.
Interesting.
So we've seen a lot more international hiring for engineering teams. What has been really interesting as well is we've seen an uptick in international VCs invest in Indian-based companies, which are investing more in go-to-market strategies in the US market. And I think, well, what's interesting too is I think part of that strategy is US companies are playing retreat. They're playing, okay, now shit, we got to scale back, focus on profitability, and they have to focus on this reorganization versus a lot of Indian firms that already have a low cost structure, or at least more so in the US, that they can continue to focus on offense. So you got international funds like Prosus that are investing in these Indian-based firms to build their go-to-market strategy in the US. So just some nuanced things we're seeing.
It's really interesting. I'm from Pakistan, and so I have tons of family in India. So it's been really fascinating to see how India has become this huge player in the tech world. And I think what will be really fascinating to see is at what point does compensation start becoming high enough in tech in India that arbitrage is no longer available? Because right now it's very simple, right? Like if you hire tech talent in India, Pakistan, or any one of these countries, you're paying a fraction. And so you'll deal with the time zone and the other issues that come with having a team that far away, because the cost benefit is so significantly in your favor. But I have noticed, like, there was this one company in Pakistan that started this trend where they started paying closer to European and North American compensation to their people to really be able to attract the best. And it increased like the base level for all of those roles. And so it'll just be interesting to see at what point does it get to a stage where now it's no longer competitive to do that. And then how does it all play out?
Well, sure. And that's a good strategy, I think, to pay people very well in traditionally, I guess, cheaper markets, right?
Yeah.
From a US investment perspective. So honestly, so we started about 5 years ago, we built a subsidiary in Romania.
Oh, interesting.
And we could have gone the path of least cost possible, where we're going to hire recruiters at market price. But what we ended up doing is paying people around twice as much as what they could earn elsewhere.
Yeah, because that was still a lot cheaper than hiring them over here, right? Yeah.
Right. Yeah, and it's, so we were still getting some of that price arbitrage, but we were also we didn't get greedy with it. Like our goal was, hey, let's compensate people really well. Now, and since then, we've actually scaled back from the subsidiary, and now over 90% of our employees are US based, but for other reasons. But, I think you're right. Like, I think it's going to be kind of a rising tide with the remote work and flexibility, where we're going to see increased salaries globally. However, I do think that possibly time zones in and of itself could restrict salary growth to some extent. And I'm not an economist.
Interesting.
But, if you can, as a US based company, if you're going to pay full price, you're probably going to just hire at a minimum in North America. So maybe we see.
Yeah, you're going to get somebody closer to your time zone at that point, right? Because if you're going to pay this type of compensation, then you want all the benefits of that compensation: proximity, cultural alignment, all of these things. It's only when there's a difference in how much you're paying are you willing to deal with those issues. There is this really interesting company that had built a 24-hour development cycle by building small teams in different markets, which I thought was really fascinating because they were shipping product at a pace that I hadn't seen before. And the only reason they were able to do it is they had all time zone coverage. So there are some interesting plays of that sort as well, it's a really hard one to implement and execute, but if done well, it can be a huge advantage, especially in a category that is competitive, where the speed of developing and shipping product is necessary. In that type of a scenario, if you can get this right, it's a game changer, but it's so hard to get right.
24/7. That's like every business owner's dream.
Yeah.
You get people at different time zones and the work never stops, right? That's like your company's working for
the
you while
absolute
you sleep.
best. It's literally like your pace of shipping product could be 2 or 3 times your competitors at that point, right? Like, and that is, that's a real difference maker. So,
oh hell yeah! Oh, now you got me excited. I'm going to rethink my strategy 5 years out. Like, what do we? And so I feel like as services, it's a little bit trickier because you would need to have clients in a lot of clients in all those different regions, because it's going to be hard to find talent. Like, one of the challenges with Romania was, even with high salaries, culturally, first of all, they don't care quite as much about money. They want to earn a good living, but they care about stability. They don't care about, hey, they don't necessarily care about earnings if it's going to inconvenience their lifestyle too much. Because they were recruiters, we asked them to work US based hours. And so that cut down the candidate pool still significantly, even though we were paying a lot more. So for us as services, I feel like it's a little harder, but like product companies, yeah, I could totally see development teams in different time zones like that, as long as its process is built up properly to keep everything organized.
I think it's a really interesting point. Like, I used to sit on the board of a software development company that was based out of Pakistan, and then one that was based out of Toronto as well. That was completely onshore Canadian employees working with North American companies. Both had North American clients, but they just had different ways of doing it. And I learned that for technical roles, that the difference in markets, it doesn't make much of a difference, right? Like, the technical aptitude capabilities are there. But if you start going into things like sales, right? Like, there are horror stories of people that have tried to outsource the BDR function to a company in Eastern Europe or Asia, or even Mexico or South America. It doesn't work. And I think for recruitment, it is similar. Services in essence is you're selling the ability to solve a problem. You're not selling this tangible product that they buy it, they know exactly what they're going to get, right? Like, when you buy a CRM, you know what you're going to get. But when you are buying services of any sort, whether you're going to a lawyer, a doctor, recruiter, a consultant, accountant, you're buying their ability to solve a problem for you. And you're taking this leap of faith, and you'll do it based on a couple of things. They have the niche focus that aligns with your problem or your area. They've dealt with similar clients before. They've solved similar problems before. They are communicating with you in a sophisticated and intelligent manner. But at the end of the day, you're taking a leap of faith. And so the thing that helps you take that leap of faith beyond everything else, in my mind, is when you are dealing with and talking to and working with true experts. And so the job of a services business is to develop expertise in its people. It takes time, it takes effort. But I think because of that, there is a need to hire people that you can see working in the business for way longer than sometimes you have to think, or a longer timeline than you would think in a product business. And so because of that, it's probably better to have proximity, not because people in that part of the world can't work for your company for a very long period of time, but to sometimes drive long tenures, you need things that proximity allows for, or at least allows for in a more efficient and cost-effective manner. So that's, I think, one of the major reasons why a company like yours or ours would focus more on hiring people around wherever they operate, because then you can bring them together, and then you can the time zone advantages play out, and then you can have events, and you can, there's a lot of things that play out of that sort.
Yeah, for sure. It's like, you want to show up to SaaStr like 20 deep, like all your recruiters, right? Put on some t-shirts, and it's like, you don't even need to do a sponsorship. You're rolling deep with your team, right?
100%. Yeah.
So, well, hey man, that's so cool. We just added like 15 minutes of value, and it wasn't even on the agenda. So
it wasn't on the docket.
There we go, man. That's how it's done. I love that. So to get to the buckets of topics that we had initially brought up for this conversation and invested a fair amount of time in putting together, let's start with, I suppose, the elephant in the room, something that pretty much everyone in tech, whether in talent acquisition or executive leaders, are thinking about right now. Let's talk about the overall state of the labor market. Let's be, I suppose, tech centric. Let's focus on the tech industry, our people, and let's try to give them some insights from our unique perspectives, having worked with hundreds, if not thousands, of tech companies. So I'd love to get your thoughts on what we're seeing in the labor market right now. How is it going? Maybe common misconceptions. Would just love to get your thoughts on what's going on.
For sure. I think it's just been this really interesting 2-3 year period, right? Like when we look back, I would say this is probably one of the most interesting economic periods that has played out in the last couple of decades. And when we look back, that's probably how we're going to look at it. If you think about it, it starts with the pandemic, right? Where something really interesting happens. You see that demand for technology across the board increases exponentially, and for a number of reasons, right? Like because businesses had to, because of the lockdowns, businesses had to operate remotely, so they needed to buy technologies to be able to even just function in that environment, and then to be able to thrive in that environment, you need a lot more. And on the consumer side, you and I stuck at home doing everything digitally that we used to do in the analog world. And so where does that show up? It shows up in demand and revenue growth numbers. And when you're sitting in an economy where the cost of capital is 0%, right? Like 0% interest rates. As investors, you look at those two things and you start just aggressively deploying capital. And because you're deploying capital and you're seeing these like once in a lifetime type of growth numbers and revenue and demand numbers, you try to win as many of the good deals as you can. And what you have, you have a couple of ways to stand out when you're an investor and trying to win the deal. But the biggest thing that they can use is valuations. And I think the market was just in this really interesting moment where low interest rates and high demand and high revenue growth converged. And it felt like this moment in time where we had to just all get in, and we'll do what we need to do to get in. And so that led to valuations coming up to a point that we'd never really seen before. Like if you think about it, a tech company on average is given a valuation of like 10 times to 20 times revenue, right? Like that's a good range to keep in mind. If you look at the public markets right now, even the top highest growing, fastest growing companies don't get 20x, right? We were in a market where 50 to 100x was normal, like you would see it across the board. In the background, while all of this is playing out, the thing that led to the demand and the revenue growth that we'd never seen before was also creating inflation-related problems, right? Supply chain problems like COVID, basically. COVID was causing supply chain disruptions. Then you had the war in Ukraine and its implications on energy and food prices. And so inflation was now coming up. And then inflation is something that central banks have this one blunt instrument that they can use to deal with, which is interest rates. And so when you take interest rates up, you're cooling the economy down. And I think the theme of last year, if we were to say what was last year about, it was about seeing all of that play out. Because as interest rates were going up, you see our economy start cooling down, layoffs start happening, demand for talent goes down, companies find it harder to generate revenue in this type of an economic environment. And so last year was that. I think if you think about the labor market now, it is so intricately and deeply connected to the interest rates because interest rates will cool the economy down if they're going up. And that means that demand for talent is going down. And then maybe, it happens often, but it's still a maybe, unemployment goes up, and supply becomes more available, however you want to call it, right? There's a chain of events, demand first, then this happens. But sometimes this might actually not happen. And that's interesting. We can talk about that a bit more. In terms of like practically seeing how this played out, I think the peak in the labor market, at least in our world of tech and our world of tech sales, was Feb 2022. At the time, this will help contextualize it. The demand for software sales talent in the top 10 markets of North America, there were 147,000 open jobs for 92,000 people that do those jobs. That was the gap. Like if every person took a new job, you would still have thousands and thousands of unfilled jobs. Right now in all of tech, not just software, but all of tech, there's 96,500 open jobs in all of North America, not just 10 cities or 10 states, right? So demand has dramatically dropped. But you don't look at demand alone. You have to compare it to supply. There are 96,500 open tech sales jobs for 825,000 people that do those jobs. That's still a relatively competitive talent market. And so it's really interesting to see how that's playing out. it's fair to say demand has dropped significantly. The next thing will be, does supply become a lot more available? And that's the question, right? Has it become more available? Is it more available right now? There have been 175,000 people laid off in all of tech between last year and the beginning of this year across the world. It's really sad. But when you just look at it from a data perspective, there's 9.9 million people in North America alone that work in tech. So 175,000 versus 9.9 million. I don't think the layoffs have been significant in the grand scheme of things. There's still 5 times as many open tech jobs in North America as there were people laid off in all of last year and the beginning of this year in all of tech in all of the world. So the supply impact, in my mind, or from what I can see, hasn't played out just yet. We've seen demand drop, but supply still is we wait to see what's going to happen with that. Maybe there will be a lot more layoffs this year, and there are a lot of people that think that'll happen. We can talk about why, and that'll change the dynamic. But as of right now, what we've seen is demand drop from an extreme peak to a level that, when compared to supply, is still a relatively competitive environment in which hiring, in my mind, does not necessarily become easier. I could actually debate that it probably becomes a little bit harder.
That's all very helpful. And I have some follow-up points that I think can also add value. I think, first off, just to echo your point, people tend to look at a top line number. People make this mistake all the time, whether they're thinking about revenue or they're thinking about any type of supply and demand equation. I think you're right. People are looking at demand dropping and then assuming it's going to be easier to acquire talent.
Yeah.
I think that is wrong. I think that it is easier. I mean, let's not, I think overall it probably is easier, not necessarily for high level positions, but maybe for some IC roles, it's a little bit easier in my opinion. But I think it's still pretty competitive, and you do have to look at supply. And I don't think that that's a conversation that is circulating on LinkedIn and in the news. I don't think that that sells copies of whatever people are selling. It doesn't grab eyeballs and clicks. No. And so we're not looking at, and nor I also don't think people, they want to look at something for 3 seconds and get a soundbite and feel like they know what's going on.
Well, also what happens is that we're good at remembering history, and history repeats itself, but it doesn't repeat itself 100% in the same way, right? And so just because in 2000 and 2008, hiring became easier for those that were hiring because layoffs were so across the board and the numbers were so much higher and demand dropped so much, we think, well, that's exactly what's happening right now. Because the capital markets have dropped in ways that match those years, right? It's just that we're not there right now in terms of demand and supply of labor, at least in our world, which is tech. And for me specifically, it's tech from a go-to-market perspective. I would say that, maybe for some roles it's easier, but let me pose a question to you. Last year and the year before, when we were in a really hot market, demand was easier for companies to generate. They were generating tons and tons of demand, right? And so when demand is being generated at the velocity that it was being generated at because of the state of the economy, the salespeople you hire, you could have a B-level salesperson in your team who will probably still be in and around quota, right? Because at that point, the job of a salesperson completely changes. You're taking demand and you're navigating it through your process and you're maximizing the chance of closing it. Some would say order taker. I would say that's that's not how I would think of it, but you are more of a conductor at that point. Whereas in this market, where demand is really hard to generate, you don't have the luxury of hiring from the top 20%. You have to hire from the top 5%, the people that have the ability to be creative and tenacious enough to generate demand in this market. So if you are hiring, your pool was 20% of the market that you could hire from last year or the year before, and it is 5% right now. So to me, even for those IC roles, at least in sales, it can still be quite hard to make great hires.
I think so.
Yeah.
Oh, go ahead, man. Sorry.
I was going to say, if it just feels too easy, they're probably doing something wrong, but yeah.
Right. Well, that's right. If it's too easy, are you screening candidates properly and putting them through a robust enough interview process? The goal should always be to be the best. The best people are the best fit people, I should say, are the individuals that are going to help your company generate whatever business outcome that you're trying to strive for. As I like to say it, it's like top talent is always going to have options in any market condition, right? If you're pushing high enough, again, if you want to be the best at talent acquisition, the 95th and up percentile of folks are always going to have multiple options, particularly as you get to more strategic or rarer skill set, particularly obviously like leadership roles. You need great leaders, you need great strategic folks, specialized folks all the time, and they're always going to have multiple options. So I think it's a really bad mindset to have that somebody top talent is only has you, right, that they're considering. They're still going to have
100%.
several options on the table.
If you think of investors are looking to invest in the N of one type of company, right? The one that can be the category leader. And I think what's the difference between a good company and a category leader? It's the people. It's the people that they were able to hire, because it's a really hard challenge for companies to solve. These companies hire at a velocity that we've never seen in history before, right? Like, think about triple, double, right? Like, from a revenue growth perspective, well, your employee count is dramatically increasing during that journey. And when history have we seen an entire sector have hundreds of companies that are hiring at that scale? It hasn't happened before. And it's going to be, to me, the hardest problem for them to solve is to maintain the quality of hires as you increase in size and scale at the velocity that you're increasing at. And it's the biggest difference maker between them being number one in their space and them not being number one in their space is the quality of the people that they can bring on board and how they enable and equip those people to be able to create the outcomes that those people are responsible for. Anyone that doesn't give it the due attention, the due amount of resources, and recognize the difficulty of that problem to solve, to me, doesn't have what it takes to build that N of one type of category leader. And unfortunately, we've spoken about this also between us, which is that internal talent acquisition, when you think about the challenges of internal talent acquisition that you see quite often out there, you realize that for a lot of companies, they haven't given it the right attention. They haven't given it the right amount of resources. That division is usually quite under-resourced and understaffed and underappreciated and overworked. And if those companies truly recognize that this is probably the most important division in the company, because it's going to speak to the quality of the people that we can hire, which is in turn going to speak to the quality of the product we can build and how well we can go to market, then you wouldn't see that play out the way it plays out as consistently as it plays out.
And I think one huge missed opportunities for growth stage tech companies and they usually wait way too long, is to have an executive recruiting team, or at least one or two executive recruiters that are doing that full time and have a ton of experience doing that. Because to your point, category leaders are going to have category leading talent, right? I mean, the best talent available in that space. And one of the most important things is, who are the leaders that you're hiring for that company? Because those are the ones that are going to be operating the business on the day-to-day basis. They're going to be hiring the team. They're going to be putting in the process. They're going to be able to put in the tech. And one small layer of protection that you can have is if you build out incredible process and technology. And a lot of roles, maybe you can get away with the B player a little bit easier than if you don't have process and tech. So it's all important. Hiring A players for every role is important, but you have to think about starting at the top down and making sure you're getting in the right leaders. And, if there's anything that's most important to get the absolute best folks, it's on your leadership team. So I think, that's one point for sure.
If you think about why that's important, right? It's so important to recognize the why behind it, which is that if you are in the workforce and you're looking for a job, you and I have spoken to, between us, thousands of people that are best in class of what they do and are considering a move, right? And you ask them, well, why are you thinking of moving? And it's usually has nothing to do with things like perks and anything of that sort. It's usually to do with the fact that they're either not inspired by that mission anymore, they don't see growth in the organization for their career, they don't feel equipped for success, or they don't like their manager. And a lot of times when you ask somebody, why did you pick that company, if they have optionality when they're in the market, why did you choose this company? Usually in the top two things is the person that they're going to be reporting into. Why? Because that person is going to, they've decided out of all the different options I looked at and all the different people I could report into, this person is going to help me become the best version of myself. This person is going to help me actualize my true potential. They will equip me for success. They'll support me. They'll do what needed to do, what they need to do for me to become the professional I believe I can be, right? And so if you don't have A players over there, then the A player will never join a B player leader, right? If A players will only work for A players. And if you want to be a category leader, you're essentially saying we're an A-grade company, right? Like we're the A++++. And so for that, you need a leadership team that is A's across the board, because then you have the chance of them hiring A players under them. Whichever division you don't have an A player leader on top of, you will not have A players under them as well. It just never plays out that way.
It doesn't. And even if you do, you're lucky enough to get one because you just throw money at them, they're going to leave. They're going to leave.
Yeah,
it's not going to last, right? I mean, I think too, it's like one thing just to really simplify it, the way that when I talk to CEOs that aren't in our industry, right? I say, it doesn't matter how good your recruiters are if your hiring managers are not investing in learning how to hire top talent, right? If you
100%,
you can have the coolest, most expensive, whatever talent acquisition department with a fantastic VP of recruiting or talent acquisition, but if the VP of engineering or VP of sales isn't committed to best practices, it doesn't matter. And so one thing that I discuss with CEOs is, look, you need to have hiring performance metrics in place for every VP company-wide, because a VP of recruiting cannot influence how the VP of engineering is operating. So every leader needs to be accountable for their own hiring plan.
I like that. Yeah, 100%.
So that's, sometimes I see that, a lot of times I don't. And it's,
well, you see it in the best, right? Like if
right.
you look at, in our world of, go to market, if you look at the top 100 CROs out there, those top 100 CROs believe that recruiting and people is one of the largest responsibilities for them and their people, right? Mm-hmm. And so they are not handing this off, because it's like handing off the most important part of your job is to build a great team that can go and achieve these targets, right? That you set out for them. So it's like the most important part you're going to give to somebody else, and then you're going to try and deal with whatever they've given you. Like the best don't do that. They want to control the outcome as much as possible. And they understand that they're the ones that are best suited to be able to have intelligent conversations with the types of candidates that they want to bring on board and help them analyze the risk versus upside of joining this company, and even get them excited up front to want to even talk about this company, right? They also, if you click into it, they know how to work with internal and external partners in a really good way. Like they know that it's a partnership. They know how to excite the partner, equip the partner, deal well with the partner, give great feedback. Like you've had clients, I've had clients that give the best feedback in the world. And then there's the other end of the spectrum as well, right? And what does the great feedback allow for? It allows for us to then go and help them really well, because we're understanding and making adjustments along the way. There's something I think about, which is like, what is the best way to set up internal talent acquisition? You tell me your thoughts. You've given this a lot of thought, and your firm is like, is broader than what we do, and is probably closer to being, I think we just solve different types of problems, right? Like you guys are an embedded recruitment partner. We're not RPO style. We are a different format. So we see the world from different lenses. And so I'm curious to see what you think of this, which is that it's almost impossible to build the right type of internal talent acquisition team at a high growth tech company. Why? Because in essence, it has to be like an elastic band that can go up and go down based on needs, right? Like the hiring needs of these companies happen in spurts. And so there are certain moments where you're going to hire at a velocity that you need to hire to get the right foundation for now the next phase of your growth. And then after that, there'll be like, sustained hiring as well, but there's a significant spike in these moments. And so you get a choice. Do we build a talent acquisition team for that type of for that, or do we build it for the average sustained hiring and then supplement the gap with external partners? I think that's like a fundamental choice a company has to make, because if they decide we only want to do everything ourselves, then those are the companies where you see talent acquisition teams get laid off over and over again as those companies go through their journey, because you essentially have to build for your max needs, but those max needs don't stick around for a long period of time. And so that's like something that I think about, like what is the right size and structure and way to think about internal talent acquisition? What are your thoughts on that?
I do have some interesting thoughts. So in the early days of Secure Vision, I built myself out. I ran talent acquisition essentially as a head of TA for a few companies. I also was a chief people officer for a 100-person SaaS company. And then with my own company, as with yours, right, in the CEO role, we've built out recruiting functions. So yes, and from an RPO perspective, for some of our clients, we are running talent acquisition. We are 100%, right? Typically, it's usually a 70-30 split, 70% in-house, 30% us to augment that and provide a layer of flexibility. But I do have some pretty clear thoughts. One, and we've touched on this several times, the past couple times we talked together, the best talent acquisition teams operate like revenue teams. As you mentioned, you said, talent acquisition is a science. It's not an art. And when you look at the technology stack and the data-driven approach that companies take to sales and marketing, and then you look at that same company and how they're operating in talent acquisition, it's like the data-driven
100%.
approach like falls off a fucking cliff. It's just incredibly
100%.
disappointing. Like if you keyword search recruiting ops, you don't find like anything, man. Like there's just this total gap. So I think that's one thing. It's like building out the talent acquisition team in a data-driven way, leveraging process and technology, not this old school like 70s way of like, hey, it's just relationships and feel. Like, no, you need a data-driven approach. You need to understand not only cost per hire, you need to understand cost per source. You need to understand conversion rates to see if certain channels are scalable. That's why we were talking about Brandon earlier with founding Assemble, which is a applicant tracking system based on Salesforce. For those listening, it's episode 1 of season 2. Definitely check it out. It's a very technical, good episode. And basically what we talked about is having a core Salesforce license, but then a revenue tech stack integrated so that you can actually run talent acquisition like a revenue org. And what's really cool about Assemble is it's for internal companies. Brandon's first company was just on the staffing side. Now, hyper-growth SaaS companies, other companies can leverage this in-house, which is pretty dope. When you have my last point, when you have the right process and technology in place, it protects you it helps you achieve hiring plans in a market rebound. So a lot of talent acquisition teams, when they don't have process and technology in place, what happens is when they hit a down market, first they cut us, right? Their vendors. Then they cut their internal talent acquisition team. Then pent-up demand occurs. Even if they're not growth hiring, they at some point need to backfill, right? Then they end up trying to hire recruiters.
Back to us.
Right. Back to us because they're trying to hire internal recruiters when everybody else is. Recruiter pay jumps. They can't find them. We make a lot of money in our companies, right? And we rebound, right? I think that's how it goes. But when companies invest in really great process and technology, they are able to do more with less. So if they have to lay off their internal talent acquisition team, when they have to plug in recruiters back into the equation, those recruiters are going to be able to become value creators a lot faster. So
that's a really good point.
Right. So I always think it's like you have to invest in process, and technology needs to be consistent. It doesn't matter what market environment you're in, but that tech stack needs to be in place for the long term. As much as I hate this being the reality, recruiters get cut in down markets. And so when you're in a growth stage company, I'm not saying all companies, but there might come a point in time where if the correction is bad enough, you have to cut some of those internal recruiters. But at a minimum, you need that process and tech in place to deal with attrition and to be prepared for a market rebound. So
it's such an interesting point, because one of the things that happens in a market that is going down is that you start believing that hiring is easy. We spoke about that. And then maybe it's not easy right now, but it is very fair to say that when the market completely goes to shit, that hiring does become easy for the few that are hiring, right? Like for that minute in 2020, when the economy just went up in flames, right? Before the government stepped in with subsidies and quantitative easing and low interest rates. Before all that happened, you had millions of layoffs. For the few companies that were hiring, it was much easier, right? But if you think about like a tricky economy, like the one we're in right now, I would say this is an economy that if you say there are 4 types of markets, there's hot, warm, cold, and frozen. That frozen market is its own thing. But right now we are kind of going between semi-warm and cold, right? Like we keep going back and forth between that. In this market, if you actually were measuring your data and saying, how many qualified candidates do we have to assess before making a hire? I would say that you will probably see an increase in this market than in a hot market. We looked at our data, and we work on thousands of roles and place thousands of people. In a hot market, we had to submit 4.5 people per closed role. Right now, it is 8 to 9 people submitted per closed role. Why? Because companies have less hires to make. They have less risk that they can take on. They're going to do more due diligence. Their bar for hiring has gone up. And on the candidate side, candidates are optimizing for risk management just like everybody else. And so if you're looking at a job and you've got a bunch of different things you're looking at the same time, the things that are attractive to you are going to be very different in today's market than what was attractive in the hot market that we exited. And so candidates are optimizing for things that you might not be able to offer them. They might even just decide not to. They might explore a bunch of things and decide, I got this job. Let me just see how this plays out and stick with this for the next 9 months and then make a move. And so you need more candidates in play, which means that you actually don't need less resources. You kind of need more. And so you wouldn't have the proof point to go and slash the budget and the infrastructure and the people in the talent acquisition team the way that some companies are doing because they think they're right sizing that team.
Yeah, I think it's not uncommon for companies to cut talent acquisition too deep and they end up spending more money. And I get it. It's hard as a CFO when you're looking at a P&L, you're looking at a forecast, and you have to show a path to profitability to investors. It's hard as hell. So I do have empathy with companies that are going through that struggle. But man, you're right. Like I didn't think about that, but you're right. Submittals do go up in these markets because like the way that I look at it is if you're hiring 20 account executives, a good revenue leader is going to know, okay, X percentage are going to be A players, X percentage are going to turn out to be B and C performers. But if you're only hiring 3, you better get it right.
And 3 that are going to sell in this market. Because if you're a salesperson, like let's say you're a mid-market AE who started your career in a great market and you kind of have built up in a great market, do you have what it takes to sell in this market where it's totally different? Like we've not had to sell in a market like this for a very long time, right? So there are a lot of people that don't have the skills and capabilities to do that. So if you're making 3 hires, you have to be so careful that you get those hires right. And that means that you're going to have to spend a lot more time and energy and attention towards making those hires. Then sometimes you end up thinking at the onset because somebody told you that, oh, in this market, at least hiring will become easier. It's like, maybe it will one day. You know what could make it easy? Last year, there was another record that was set. The number of IPOs that didn't happen, right?
What does that mean? Tell me what that means.
So think about every year, there's a certain number of companies that go public, right? And last year, the least amount of companies went public out of the last couple of decades, I think.
Damn, I didn't know that.
Right. So now what happens is that you had all of these companies that were in 2021 at the cusp of going IPO. and they'd raised a large round. They were preparing to go public, and then the market turned. Interest rates came up, the correction began, valuations came down, they couldn't go public. And so they'd raised in 2021 at crazy valuations, but a significant amount of money, right? Like if you're a pre-IPO company, you raise a pretty large round. And so they were probably careful with their money as much as they could have been, which got them through last year. But how long can you get through without going back to the market for more money, right? I don't see those companies, and there are hundreds of these companies out there. They're not going to be able to survive all of 2023 and then some of 2024 without going to raise money. Where do you go? You either go to the private investors or you go to the capital markets. The private investors are not going to be looking to invest in those companies. The valuations they raised out were too high. And it's going to be really difficult to make that type of a down round that needs to be made for that investment to make sense, for it to work out, right? And in the public markets, the valuations are nothing compared to what these companies raised their last round at and want to get. And so I think that those companies are in no man's land, and there might be a lot of layoffs that have to happen over there towards the later part of this year. And that would make supply significantly different than it is today from a dynamics perspective. And at that point, we might be in a market where those that are hiring find it a little bit easier than I think they will find it today. But it's only if that happens. Otherwise, if it just stays the way it is from a dynamics perspective, this is not an easy market to hire in.
I'm really interested to see what demand looks like for Secure Vision by week 3 of January.
For your business.
For my business, because I want to see, based on annual planning that occurred in the last week or two of the month, a lot of the customers and prospects we were speaking to were saying, we're going to have everything finalized the first and second week of January. So what I'm really curious to see is how many companies went on a hiring freeze versus how many companies are going to aggressively start pursuing hires again, even if it's lower volume. How many are going to need to hire urgently, even if it's just for a few roles? So it's still too soon. We are seeing an increase of quality pipeline towards the end of Q4 and going into January, but it's too soon for me to give feedback on how strong demand is versus Q3 and Q4. And again, this isn't based on a big Deloitte or Accenture study. This is based on us working with 150 hyper-growth tech companies, early to mid-stage to pre-IPO. So I'm really curious.
My prediction would be that it has to be higher than it was in Q4 at least. Because Q4 market sentiment was really down. And when you look at tech companies, like let's say you work with a lot of high growth tech companies, a lot of them have SMB and mid-market sales motions, right? And a big part of your business is go to market. Those companies' hiring season is Q1 and Q2. And so you might be projecting a lot less growth than you projected last year, but you're projecting some growth, right? Like most companies that sell something that is mission critical or at the cusp of mission critical and nice to have, like all of those companies are going to project some form of growth this year. So they have to hire for that. There are people that are going to get promoted. You have to backfill those. There are people that are leaving you because you couldn't promote them because you didn't have more roles for them. And so you have to replace them. So there'll be this is the season where there will be there will be more demand in this season than there will be in Q4 of last year. And then hopefully once you get past Q1 and Q2, the economy has found its feet again. I don't know if it does or if it doesn't, but that would be the best case scenario for demand for you, right? Like it would be that these 2 quarters you ride out, and then by then the economy is back in a good spot, and then moving on past that.
I was at a executive dinner for Pavilion in New York probably about a month ago, and a chief revenue officer looked around the table and said, how many of you are looking forward to 2023? Mm-hmm. One CEO raised her hand, and the CRO was like, why? And she said, because I want to find out where bottom is in this market.
That's interesting.
I think you're right though. I think we probably, in terms of hiring, we're going to see an increase in Q1 because even if it's not necessarily growth hiring, which we are seeing growth hiring, attrition happens.
Yeah, there's going to be This of all the quarters, these are the most active quarters, right? So whatever you saw in Q4, you'll see more than that in Q1, and then we'll see how things play out past that. It's an interesting comment that that person made at your dinner. I think it's also fascinating to see who's really good, right? Like you get to tell who's really, really good at what they do in this market. Sequoia had this deck that they presented when the world was falling apart. I think it was a crucible moment type of deck to their founders. And it had this one slide in it, which was a quote from Senna, the F1 driver. And he said, you can't overtake 15 cars in sunny weather, but you can when it's raining. So I think that's a really interesting lens with which you look at the world. And the second is that in a hot market, there are a lot of people and a lot of companies that do really well because of the state of the market. You're riding the wave, right? And I think in this market, you develop skills and capabilities that will be hugely helpful in all sorts of markets. So I think this is a time to develop as professionals. But secondly, this is a time to really see who's got what, right? Like how good are you really? And so as a sales professional, like a lot of them will get to see if I was I able to generate demand and close deals the way I saw some other people on the team do in this market. And if the answer to that is no, then you get like a whole range of things that you need to work on to prepare yourself for the next cycle. So I think there are really interesting aspects to this. It's painful, it hurts, like it is stressful, it is annoying. And for those people that have been impacted by layoffs, it's sad and depressing for sure. But in a lot of things, there are positives as well. And I think there are some interesting and positive things that will come out of this, at least in hindsight, when we look back.
Just to echo something, right? When the F1 quote, when we put on our executive hats, I couldn't agree more. Like, this is it. I don't, up markets, you're basically riding the wave of the work you put in right now.
Yeah.
So this is our time to position our companies for significant growth.
Yeah.
As the market rebounds. So, well, hey, Asad, this was fantastic. Like I love the banter, the back and forth. It was great. I think you added a ton of value to our community. I just want to say thank you so much for your contribution today. We're definitely going to have to do this again soon.
Brilliant. Thank you so much. I thoroughly enjoyed it. We went off of our schedule and spoke about all sorts of fun things. And I hope it was useful and valuable and enjoyable for you. And I look forward to coming back whenever you want me.
Asad, if people want to talk with you and connect, where can they find you?
LinkedIn, if you want to connect, Asad Zaman, you can search me. I'll pop up. I don't think there are too many with my name there. And then if you want to get in touch and in another way, you can email me. It's asad.zaman, so asad.zaman @salestalentagency.com.
Sales Talent Agency. So sales.talentagency.com is your company's domain if people want to learn more.
Salestalentagency.com. Yeah.
Perfect. Okay, great. Well, hey, this was a lot of fun for everybody tuning in. Thank you so much for joining us. We will talk to you next week.
All the best.